The first 90 days in finance determine integration speed, confidence, and long-term trajectory. And while most analysts entering global banks and investment firms have already completed internships, which bring exposure, the fact is that what they often lack is institutional fluency. For early careers program leaders, the objective in the first 90 days isn't remediation, it's structured integration. Leading institutions embed Intuition Know-How, a premier digital learning solution for those in the finance industry, during this period to build that fluency both deliberately and consistently across global cohorts. Even if you have a high-performing intake, variability is an inevitability. Analysts will arrive from different desks, regions, academic programs, and internship functions along with different backgrounds, meaning your intake will of course be varied, but all will also need to be brought up to a certain knowledge level to set in place the best possible chances of high performance. Without deliberate alignment, this variability appears immediately in areas such as question quality, analytical confidence, ability to follow senior conversations, and speed of task execution. As a program leader, you should look to consolidate core institutional knowledge across the cohort early on in their program. This includes structured reinforcement of fundamental knowledge areas such as how banks generate revenue, balance sheet mechanics, capital and liquidity frameworks, the role of treasury and funding, market structures and instruments, macroeconomic drivers, and of course, as mentioned, your intake will have varying degrees of knowledge on your chosen subjects, so specific learning interventions like testing out can help save time for both the organization and make work feel more fulfilling and purposeful for the learner. Early on in your program, analysts should also begin expanding beyond their immediate function, learning about other areas of the business that might impact their work or that they can potentially cross into later on in their career. Early career professionals often understand their desk before they understand how the institution operates as an interconnected system, and both are key requirements. Depending on role and location, structured cross-functional reinforcement could consist of knowledge development across credit risk and credit analysis, counterparty credit risk and derivatives exposure, market risk and liquidity risk, asset liability management, Basel III capital and liquidity requirements, corporate and investment banking products, and portfolio construction and asset management. Intuition Know-How allows early careers leaders to curate structured pathways across areas such as the above, connecting topics coherently, rather than leaving understanding fragmented. This is where performance begins to differentiate. Analysts who recognize interdependencies across other key areas of the business relating to their work will mature far faster than those who don't. As the intake progresses, focus should shift from comprehension to perspective. The intake can begin connecting operational knowledge to broader strategic themes, shaping financial services that may impact their immediate work or be useful as their career progresses within the organization. This could include learning about emerging areas of the industry, such as sustainability and ESG, climate risk, AI and generative AI, AI ethics, digital assets and blockchain, digital transformation and operational resilience, and evolving global regulatory expectations. It's at this point where structured knowledge transitions to strategic awareness. Compliance is obviously going to be a fundamental part of a finance intake's learning. Going through key compliance areas not only protects the organization from a legal standpoint, but can also improve organizational performance through better decision-making, improved risk awareness, reputational improvement, and operational efficiency. The first 90 days shape how analysts think about governance, accountability, and risk ownership, and should be a key consideration in your early careers program. Intuition Know-How's regulation and compliance coverage supports structured learning across Basel III and capital regulation, anti-money laundering and sanctions, fraud and financial crime, ethics and conduct, conflicts of interest, data protection and privacy, US, European, UK, and Asia-Pacific regulatory regimes, and more. Embedding this understanding early influences decision-making long before formal regulatory assessments occur or other potentially negative outcomes become a reality. Throughout this podcast, I've mentioned Intuition Know-How and its potential role in your early careers program. But what exactly is Intuition Know-How? It's a digital learning solution tailored specifically for finance and equips over 1 million financial services professionals globally and is trusted by leading banks, asset managers, insurers, regulators, and professional services firms. Within early careers programs, it is embedded. During pre-boarding, throughout the first 90 days, alongside instructor-led workshops, and as an ongoing learning tool, how does it differentiate from other tools on the market? It consists of human-written content from experienced finance experts. Its coverage is structured around how finance operates in practice, not just in theory, so is immediately applicable to your work. It's a flexible tool with the ability to support global, role-specific cohorts. For early careers leaders, the objective is not simply delivery. It is consistent institutional fluency at scale, and Intuition Know-How is a proven delivery tool for this goal. Learn more at intuition.com/know-how.